Welcome to the Funded Now What podcast with your host, Andrew Lee Miller, brought to you by Growth Experts. You're in store for a chat about funding, marketing, startups, and all things growth.
All right, everybody. Thanks so much for tuning in to the Funded Now What podcast. I'm your host, Andrew Lee Miller, also known as Andrew Startups. And today you're in for a really exciting conversation about what do you do post-funding as an early stage founder. Today, I'm joined by Junchen Wu, who is the founder and CEO of Menos AI, which is a really unique, I know what you're thinking. You've heard me have a lot of AI companies, but I'm still finding unique ones. So Menos is focused on the hedge fund industry, something that if you're out of the space, you don't really know anything about. So I had to grab him and beg him to be on the show because I want to learn more about the hedge fund space and how AI can actually make hedge funds that much smarter. We know that top performing hedge funds are already beating the market year after year, 20% every year. And so I just think that's super interesting. And so I begged William, aka Junchen, to come on the show. Thank you so much, William, aka Junchen, for being here.
Thank you, Andrew. It's great pleasure to be here. Thank you.
Awesome. So you just closed a $5.2 million seed round. And my first question to you is, coming from the finance space, is that something that helped you? What are the nuances to raising money as a founder who comes from a finance background?
Yeah, thank you, Andrew. I think that's a great question. I think, summarizing one word, I think it comes to the founder market fit. So the idea is this, right? We're in this great AI booming, kind of let's say era. We have great tool, the technology of large language model is such like a, powerful, meaningful, magic wand or new disruptive technology. So we're pretty much in that era, like, hey, we have this great hammer, right? Everybody has that hammer with that technology and they're looking for nails to fix a problem, right? A lot of people come with that mindset, hey, we have this tool, what problem we can solve? Coming from the financial industry, as a matter of fact, I spent the last 10 years, last decades, my entire career in the hedge fund industry. I was actually an investor, a hedge fund that we invest in early stage hedge funds. I was at Northern Trust, we're providing services to hedge funds. And then I was at a hedge fund managing a portfolio over there. So, through that, career coming from the industry, I knew all the problems, like, hey, here are all, I've been beaten by all those problems throughout my career. So I come from a very different perspective of where I knew in this financial vertical or investment asset management vertical, what problems are there and what type of problem can be solved with AI. So with that perspective, I think that really helped with our early stage, seed round. So that founder market fit is actually
that is definitely. Sometimes on early calls with prospective founders, I'll ask, why are you the founder for this? Oh, no, because I think this is going to make so much money. No, it's not about how much money. You hit the nail right on the head. Like, you need to be the person that experienced those problems and then went to the market, realized there isn't any solution for those problems, and then built those solutions for those problems. And that's what investors look for. But taking a step beyond that, do you feel like it was easier for you because you understood finance and balance sheets and these things? I mean, even actually, I should have asked you, what is a hedge fund? Most people do not know. I mean, we see articles about Ken Griffin buying another $200 million house or Ray Dalio writing another book about principles or whatever else he wants to tell people he's smart about. But what is a hedge fund and why do they make so much money?
Yeah, well, that's a great question. I'm trying to find the answer myself as well, right? So, right. Nashville, hedge funds are not kind of evil capitalists that's making huge bucks. I think it's actually a very important, let's say, player in the financial market, making the market more efficient, pushing the market forward, leading actually market. So that's it's a very important force in the market. In general, comparing to kind of a traditional like asset management, where you're probably like a long only manager manages your 401k. Hedge fund manager are generally defined as, let's say, the innovators of financial market. They use
Okay.
more innovative, ways such as the quantitative, methodology,
Hmm.
or, let's say, different type of financial derivatives, financial instruments to generate an absolute return for their investors. So that's what they do. And in
Hmm.
general, what they do is, basically leveraging all the technology and their knowledge to produce return on capital for their investors, without kind of like too much correlation with the market, so which we call
Okay.
absolute return, or alpha, right? So that's basically what hedge fund is in a
Thank
nutshell.
you for that. I did not know that definition. Makes sense. I consider myself kind of like that for marketing. I'm more innovative. Growth hacker is always trying to find ways that will beat the market as far as marketing goes. And so I think I can ascribe to that. So awesome. So what were some of those problems? I mean, you don't have to go all the way into it, but what are some problems that hedge fund managers and hedge funds get into that Minos solves with agentic AI tools?
Yeah, well, great question again. I think the biggest problem is efficiency, right? Because as we defined, hedge fund, right? They're lean, they're elite teams. They're trying to find inefficiency in the market and to generate alpha. So on the other side, they have to be extremely smart and efficient on their plate, right? So how do you leveraging AI or the most advanced tool to help them operate efficiently? Where I mean, there are two main branches, right? One is, how do you operate efficiently? Another way is, how do you make decision efficiently? So that's,
Yeah.
in my term, I tell, my, sometimes I have to tell, VC or investors or my friends or even my mom, like, hey, what do you do? I'm like, I'm helping my clients, which are hedge funds, two ways: save their money and help them make more money.
Yeah.
So easy way, right? So in
That
terms of
is really important.
yeah,
Sorry to interrupt you. That's really important for every founder too. We always talk about the elevator pitch, but the mom pitch is a whole different thing.
yeah,
You have to, if you can explain it to your mom and she goes, "Oh, that's cool," then you've gotten your pitch down. Like I've never talked about that before.
exactly.
The mom pitch is a real thing. I've been doing the same thing for 20 years. And if you ask my mom, she's like, "He does marketing shit." Okay, that's good enough. You know? So, that's really cool. So you've got your mom pitch down, but I interrupted you. Sorry. Keep going on. In what ways do you make them more money and how do you make them more efficient?
Yeah, so in terms of more efficient, so that's where I come from, right? While I was at Northern Trust, funny enough, you mentioned about Citadel and Bridgewater. So,
Yeah.
while I was at Northern Trust, Northern Trust acquired Citadel Solutions, which is a big technology platform developed by Citadel, and they
Oh,
offered it to
wow.
the industry. So Northern Trust acquired that. It's a kind of like tech infra for hedge fund operating. So we
Mm.
leverage that and providing services to our clients. And, Bridgewater is actually one of our big franchise clients. So what we do there in terms of operational front, right? There's so many, things you need to do in terms of, helping hedge fund to run their business, bookkeeping, making sure their, trade are captured correctly,
Of course.
making sure that their return, their, NAV value, net asset value, the risk are calculated correctly. So that all requires huge amount of data and the orchestration of data. So we, back in the days when as the head of quant at Northern Trust, we leveraged that, technology platform from Citadel, offering that services to our clients. A lot of
Mm.
those are highly manual, repetitive. I can still remember my days, where I started my day with 6,000 bricks in the system. Things are not matching, accounts records are not matching. Right? It's very inefficient and just the
Mm.
way.
Easily optimized by AI.
Exactly, because well, let's take an example, right? So if you're a hedge fund manager, you need to generate a two-pager performance return or exposure return, monthly, weekly, or even daily basis for your clients, right? So that requires a lot of work, manual work for your, staff, mid office staff to actually put together those reports together and share it out. Right. So now with AI, especially generative AI, we have a product that agent that actually helps just, generate those reports and those, processes, remove all the inefficiency and the manual process. With, typical situation, you probably need to hire 5 people, for a
Come
big fund
on.
or a, 5, 10 people team to do that. Now you need one leader and the AI does all the work. So that's where an example how we save, money, improve operating efficiency for our clients.
You were saying that Bridgewater is a customer of yours, for a franchise customer. So
Yeah,
basically, I
yeah.
think the question was,
How we're helping our clients,
there you go.
making money and saving money. So I actually
There you
just
go.
went through a example how we help our clients saving money, how we help our
Okay,
clients making money, which is
please.
more exciting thing, right? So yeah, yeah. In terms of how we are making our clients, helping our clients making money, on that front. So we do a number of different things, helping them with their investment strategy, develop AI agents, particularly helping them in their investment strategy decision making process.
Mhm.
We're not helping them making decision. It's more like, hey, in their research or investment decision process, we help them with inefficiency. And then one of the biggest inefficiency we have found is actually information overload, because most of our investment managers, guess what, how many emails or internal notes they receive every day? More than
Thousands.
thousands of them. And think about it, those including internal memos, third party research, sell side research telling you, hey, I'm seeing this movements in the market. Here are the opportunity. Here's the investment memo. Here's a trade idea that I'm really looking into. There's so many information, so much information overload. So we developed our, research agent called Sonar. So the idea of Sonar is actually it serves as your little, let's say, research sidekick, or
Hmm.
I more want to say it's actually your teams or PMs, offloaded brain, so that it's receiving all the information and helping you surface what information are really moving the markets.
Got it.
Yeah,
No, that's amazing. I think I can feel some apprehensions though. Before we go into the marketing stuff, which I'm super
sure.
excited to get into, do you find that, I mean, do you have to like deal with privacy? Like they don't want another outside company knowing what their research is. Like, how do you? I would imagine that's the biggest red flag for potential customers. We're going to let some startup get access to all of our research, then they can make our deals. Or like, how are you staying? Fintech in general is the most difficult thing as a marketer to be compliant in. It slows down everything. But then when you're a AI agent that's consuming all of their content and data, how are you making that safe for your customers?
That's extremely important, and that's one of our, I think, advantage. Again, it goes back to your initial question, why coming from the industry matters, right? Because because we're from that industry, we know exactly all the concerns, IP concerns, infosec concerns of our clients. So we develop our solution exactly target that need with all, everything is within compliance, everything is within our clients, safe parameter. So we
Mm.
designed our product. Actually, we brand ourselves as the partner or extended arm of their team, so that we come in, build their AI solution, white label our system to become their product. So that's our
Mm.
solution there, and it's been well received by the
Nice.
industry.
So, okay. So we raised 5 million. We've got some clients. I know offline you mentioned you're going to go fly and visit some people and prospects, which I think is amazing. Tell me about what's working so far for marketing and client acquisition and what's not working that you need help on. And then let's dive in.
Yeah. Well, I will always go through what's not working, right?
Okay,
And
let's
that's
do that.
the
Yeah,
important part. Yeah, I
true.
think, Andrew, I think what you are doing is really valuable, especially, I like that you are positioning, hey, now funded, now what, right? So one hard lesson I've learned is, you know, we closed our seed round actually early this year, and I was one of my fellow founder friend told me this, and by that time I didn't appreciate more, but now I understand. He said every B2B startup company after they close their seed round, they will go through a death valley where they cannot sign a single deal. The, you know,
Really?
yeah. Why? This is actually really important, and now I get it, right? Because for a typical B2B startup, what we do is I come out of the industry with my network, with
Yes.
the hedge fund managers, the people that I knew from my network, that I'll go to them, leverage my
Early
network
customers. Yeah.
for the early customer, made the sale. It's all founder-led sale, and it's all strongly network-based.
Hmm.
However, after that, with that, early traction, you got your seed round, right? You got investors coming,
Yep.
back you up. Next step, when you trying to kind of extended that and really sell, now your founder network is not enough, right? Because you build an MVP, you build your early product, that early product will be MVP for a reason, and you need to go through a large amount of clients to find out the early adopters who doesn't care all the kind of limitations or this. They just have that burning needs, and that process actually really need not your founder network are not big enough to run that numbers game to find the early adopters.
Totally.
So what really
Absolutely.
I wouldn't say, yeah, what's not, I wouldn't say it's not working for us. We did have a great, marketing team coming in, at the beginning I found, hey, it was not help. I was not really, getting, talking to enough portfolio managers or hedge funds just using my network.
Of
So I've
course.
started getting help, having colleagues, industry veterans join me. We go outreach all together. So I think that's has been really helpful throughout the year. And I think we definitely going forward, we definitely need a lot of help on marketing,
Yeah.
hey, now you cannot just always do network based. You need your product need to stand out. You need to have the right marketing, go to market strategy to make it work.
Yeah, I mean, in the early days, it's important to do things that don't scale. We all know that Paul Graham's super famous quote, but then founders stay too much in the marketing trenches. You are the industry expert, the SME, the subject matter expert. You're the reason the company got funded. You're the reason that clients will move forwards with your business versus just a startup bro trying to build this for the hedge fund industry. But that doesn't mean that you need to be involved in every aspect of marketing. And any founder listening to this too, I mean, at some point you become the bottleneck with marketing. And so what do? You hire full time when it's maybe a little bit too early because you haven't finalized the marketing playbook. You don't know what strategies and channels to look for in that full time talent that you want to be at your company for 5 or 10 years. You hire a bunch of agencies that maybe aren't mission aligned and they just care about their revenue, or you continue to try and baby and micromanage everything, and then the company goes through that death valley that you mentioned. And yeah, I mean, my whole career of the last 10 years since my last exit as a full-time employee has been about buying founders 12 to 18 months to not have to make that decision. So I'm kind of like the graduate degree after a founder's gotten their master's in marketing on doing it founder led on their own. I'm the
Right.
graduate degree, the little 2 year space in between. And then after that, we build a full time marketing team and we move with the data that shows that we know what we're doing. But in that time, the goal, I mean, and literally one of the major value props of what I do is, hey, we remove you from marketing 99%. It's just 1 hour meeting per week where you need to be involved in that 1 hour meeting. Even that is sometimes difficult for founders because, like you said, post funding, you're literally going on the road for 3 weeks. You have product advancements, grow the team on other aspects of the team. The reason why the podcast is called Funded Now What is because it literally is way more stressful than when you're bootstrapped. You're bootstrapped, no one cares about you, no one's looking at you. Then all this global news comes when you raise funding, and all of a sudden you have to answer to real investors that are like, we're going to meet with you whether you hit these targets or not. So you better go get shit done. And you hit the nail right on. That's when it's time to like bring in the consultants, I think. And that's there's this term of fractional stuff. I go back and forth between calling myself a coach or a fractional CMO because fractional CMOs don't usually lead execution. They just tell the team what to do. And that doesn't help for an early stage startup. So I actually lead execution and I'm in the trenches doing the work. But the whole idea is, and I don't know if I've said this, a marketing strategy is 3 things. One, what does the founder know because they've been in the trenches for so long? That these are the most overlooked piece because consultants come in and are like, oh, we need to do this, we need to do that. They tell the startup what needs to be done. And with you know what messaging is working, what features people are really resonating with. And I can usually find like industry specific marketing opportunities, like, hedge fund things. I mean, those guys and girls really love to go out to events. Like another industry, maybe a cocktail hour doesn't really matter. But if you're going to New York, I would probably put together a very low cost, bootstrapped, even though we've raised millions of dollars, cocktail hour partnering with a custom suit company and a whiskey company or something like that. Those are things that hedge fund people get off of their computer and be like, I'll go do that.
Yep.
And that doesn't have to cost any money. So there's niche industry specific things. Then there's things that the founders maybe gotten some positive data on that have worked. And then there's Andrew's guaranteed things that he knows are going to work. And so we finalize that and we take that off. And it sounds like you've been going through some of that Death Valley because the network dries up. And there is a way to double down on that though as well. A lot of these, I mean, depending on who you're selling to, if it's the owner of the company versus the manager versus just an analyst or something, the incentives could be different. They're not going to move for a $500 referral or a gift card to a steakhouse maybe, but if it could be we fly our top referrer. I don't know. Maybe they're not going to refer other hedge funds. Like, do you get like people making multiple referrals?
We do. Yeah, it's funny enough that actually we got launched August this year. We went out of stealth. One of the major reasons why is one of our actually design partner that we serve. They were a hedge fund, and they were really satisfied with our product. They loved it. So they will go out to conferences, and they get because it's funny that I think we're legally contracted everybody when you go to a conference, you have to talk about AI. So
Wow.
They were absolutely asked about, hey, what you're doing with the AI, and they talk about us. They talk about the unique value we provided, and all of a sudden, a lot of people know that we were actually reported by, some really well, regarded, in the media in the industry. And all of a sudden, people start reaching out to us. Yeah. So
that is very rare because usually big like enterprise companies that you're building AI for or selling AI to, they don't want to tell that they're using a third party company. They want you to be their secret weapon.
right.
But they probably weren't expecting that question. And they were like, oh yeah, no, we're on the cutting edge. We're using Menos AI. Oh, you don't know what it is? We're the, they should, there's ways to incentivize that. But so, that's a sign of like marketing being very easy. When you have a client that's tremendously happy and then screaming from the rooftops about the service that they're getting from you or the benefits they're getting from you, that makes everything really easy. As a marketer, I can get really aggressive on the marketing.
Right.
I like to be really cutting edge, nothing dangerous or black hat, but when I see positive green flags like that, that gives me confidence that we can go and do viral stunts and different things like events. And, if there's a big hedge fund conference, instead of paying for booth space, like going and doing something that's quite growth hacking, because we are the people trying to advance the industry out of this old school behind closed doors thing. So that's cool. But you were supposed to tell me some things that aren't working. I want a hard question. Give me a hard marketing scenario. So what's something I can help you with?
Well, yeah, good question. I think what's not working, or I think as I mentioned, we have two colleagues join us with all the marketing efforts. They have been extremely. They're also from the industry, knowing the industry really well. That has been really elevated in my early kind of stage with that value problem. But I think what we wanted to get better now is actually again how to quickly dash through the potential clients, and finding the right customer, finding the early adopters, right? Because that's important. I use the analogy saying, hey, we're a startup funder. There are two modes that you wanted to basically to sell your business. And again, I got this from one of my well-respected investor and advisor mentor. So you either go sell to, hey, I can build you a machine. What's your need, right? That's one method. Another one is, hey, I have built this machine. Do you want it? It's early stage. It has some kind of it's an MVP. But do you have that burning need that you don't care about all the other aspect of it? You just really want it. So how do we actually go to the market, quickly, among, let's say, thousands or hundreds of potential users, identify the early adopters that has this burning needs that the product we build that can really solve. I think that is a problem we wanted to more efficiently address in the future.
So this is a long answer, but there's two types of marketing. I mean, there's dozens of channels, but it all boils down to two things: inbound and outbound. Most B2B software companies focus a lot on outbound. We need leads, Andrew. We got to get leads on LinkedIn and on email. And how do we do that? That's cool. It's really easy to build a list of all 2,000 potential customers, send a LinkedIn message to the 3 different roles in the company. There's CEO, there's mid-level, there's low-level analyst and those are all very different approaches. The bottoms up approach from the analyst, from the CEO and founder down, you want to hit all of those people. And that is easy. That's ground cover as a marketer. You need to be growing your LinkedIn account with all of those connections. So that is something that should always be happening. We have a software that adds a couple hundred people a week to Junchen's LinkedIn. And then there's organic content that Junchen is sharing on his account. I mean, the team is doing it for you, so that at least Monday, Wednesday, Friday, Junchen is talking about the future of the industry and how AI can solve these problems. That is going to allow for people to come inbound as well. Most of the hedge fund related people are not going to respond to quick automation on LinkedIn. So it might be overlooked by your marketing team, but what it does is it grows your LinkedIn audience, which is amazing, because then you get invited to speak at those conferences about AI. Why would they not? Who else is building AI for the hedge fund space? Who else is carrying the industry into the future? So you should be invited to speak at those events, but it's a vanity metric. They look at the LinkedIn following, and LinkedIn also will rank you. If someone searches AI for hedge fund stuff, you'll come up more if your account is more active and gaining followers. So one thing we do is we make the founder and the CEO really famous in the niche industry in that on LinkedIn. That's going to help those drive inbound and outbound leads, right? And then with the messaging, I mean, it's literally just, are you an early adopter of like new tech? If I could tell you, hey, I have 10 years experience in hedge fund. I know about this problem, and this problem. Are you guys having problems like that? Because if so, I think I have a solution for you. You don't have to say you built it or anything. You're just a bro from inside the space that's reaching out, might have a solution for you if you have those kind of problems. Yeah, that's not something we're working on right now. We're finishing the year. We've got Q4 targets. All right, fine. I'll follow up with you. Or you give it to a sales guy to follow up with them or whatever. So that's kind of, I think it was number 2, very direct messaging. Right. If it's that targeted and that niche and that specific, I just go super direct. Like, hey, are you guys dealing with this, that, and this? If so, I think I have a suggestion that might help you. I had 10 years in hedge fund space, so let me know.
Yep.
It's just a very informal, my message to you, I wrote similar, like, hey, I've got this podcast. It's pure value for you. I like what you're doing. Come on. How can you say no? Like, and if you do say no, some people respond, oh, Andrew, how big is the reach for your podcast? I don't even respond. I'm offering you pure value. It's obvious in the first message that it's pure value. If you're coming back with asking me for more value after that, then you've lost the opportunity. And so that's the switching an ask to an offer is the main thing with messaging. So that's the first part. That's kind of with the outbound stuff. On the inbound side, and this is like the holy grail, really. A lot of teams overlook it because it's a lot more work and effort to build this. And you've got some marketers on the team. Sounds like you might have enough resources to execute it. But right now, beyond LinkedIn and doing outreach, the main thing is people and these companies and these prospects are talking to their GPTs. They're talking to Copilot. They're talking to Perplexity and Grok. That's what they're using at these hedge funds to try and be intelligent. So they are also asking, hey, what tools are out there? What solutions are out there? And you need to come up. I mean, it's such a niche space. We won't do it live on the pod right now, but I would bet that you're already coming up a little bit. But what we do is we just, even if they don't search for, hey, is there an AI agentic software builder for hedge funds? And if they build, what are the top trends for hedge funds, or what are the tools that hedge funds are using in 2025? Whatever it is, we create that content. And this is a new form of marketing I barely talked about on the podcast called GEO or LLMO, AIO. Have you heard of this yet?
Yeah, it's I never heard about that. It's pretty innovative, but I understand it's like the SEO version for.
It is the future of SEO. Yeah. And I'm seeing, I'm old enough to have been around when SEO was still not a very well-known thing. 20 years ago when I was starting my career, it was very gameable still in an organic and authentic way. You could still get your clients to the first page of Google very quickly. Google first page, not super valuable anymore. I mean, just recently got a client to the first page of Google in less than 30 days, and they're barely getting any meetings booked out of it because most people just go to the AI summary and go away. Sure. But for me and growth experts, obviously I want to dog food these marketing things myself first before I do it for clients. So we started in April just creating written content that instead of focused on keywords, it's focused on answers to large questions that people would actually conversationally ask their AI model that they're working with. And it's unbelievable. I mean, I'm getting more than 10 meetings booked a week now from articles I wrote in April, and we're not even scratching the surface. But so basically, it's a content marketing initiative. You want to have the strategy to basically, what are the questions that our potential customers could be asking the internet or their AI tools that they're using when they don't know that we exist, but they know that they have a problem? So Are there AI, and these two types of content are usually how-to articles, how to make your hedge fund more efficient in 2025. That is an article that you could also ship out to the media too. And you could become a speaker at conferences, on podcasts, hedge fund podcasts. That should be your message. Your message is, we make hedge funds more efficient. So the mom pitch that we talked about in the beginning, I use AI to make hedge funds more efficient, or even removing the word AI out of it, because outside of our industry, people are like, oh God, another AI tool. No, seriously, like, I have clients that have seen conversion rates go up from removing the word AI. And I will die on this hill. I always tell companies, do not use a .ai URL for your startup, because in our industry, it's cool. But then if you're selling to an old school industry, they don't want to work with a .ai company. It's like almost like racism. It's subconscious. They don't even know it's there, but it is. They look at .ai as, this is not a real business. Maybe they're not going to be safe for me to work with. Anyway, so we want to scale up that inbound marketing so that we are discoverable when that prospect is self-identifying themselves, essentially. So we do that through listicles and how-to articles. So listicles are top 10 ways to make your hedge fund more efficient, or top 10 AI tools that hedge funds are using to be more efficient, or whatever it is. those are very easily created with AI now, rewritten by a human so that we're not posting any AI content because the algorithms are smarter than us. You won't get away with that. But I think in April, Growth Experts wrote 60 blog posts. April was the name of her on my team as well. That's still her name, but she's not on the team anymore. But it was an internship. But she wrote these 60 articles that were top fractional CMOs for startups, top fractional San Francisco CMO, like all these different top and best and ways that startups can save money and et cetera. And the secret there is you include all of your competition. They're obviously below you, Menos AI number one, but you make it a authentic, organic, unbiased article. And we're in a little bit of a gray area right now. I don't know how well this will age, but the AI tools are still grabbing that as they're not identifying that number one is the same domain that the content is written on as unbiased. And it's still, I have verbal confirmation as of this week from another prospect that was like, yeah, I saw you on Google too, but I don't trust Google. So then I talked to ChatGPT and you guys came up number one. So I wanted to book a meeting because I just trust ChatGPT so much more. Little does he know, it's the same marketing strategies that are leading to that. Now, I'm not talking about anything gray hat or even black hat at all, because we have to be able to back up being number one there. I know that I'll say it, I've never said it, one of the greatest part-time marketers that any early stage startup can ever get, because everybody else with my level of experience has retired by now, and I just love it. I have semi-retired a couple of times and then just keep coming back to it because it's what I love. My wife tried to get me into other businesses and stuff, and I was like, this is just the only thing I really love. And so when you're really passionate and you do something really long term, as you said, 10 years in the industry, you can be really confident. And when you get really confident, like I said early in the podcast, you can get really aggressive with your marketing. I am okay calling myself the best or number one because I think you could put me on stage with other people and I could back that up. That's a really long answer, but doubling down on the inbound at the right time, testing the multiple targets with the really direct messaging, and doubling down on the inbound, if I said that right, to increase the amount of content that is discoverable when people are doing searching and research at the very beginning. That's the answer to that question. Does that make sense?
Yeah. Yeah, it would make a whole lot of sense. I think that very direct message is very important. So
yeah, these are, like you said, this is not a normal target for selling to. These are people. I mean, it's a very smart target because they care more about saving and more about ROI than anyone else you could ever target. Right. So if no matter what you charge, which actually, let me put you on the spot. How much does it cost to use your platform?
Well, we're a B2B service, so it's really, let's say, it's per seat basis. So depending on the size of the company.
Okay, give me the average LTV of a customer.
Yeah, well, that would be over 100K. So that's
okay.
Yeah,
amazing. So this is why I think I was saying before we started recording, I pivoted 10 years ago to all B2B after many years in B2C, and I still dabble in B2C stuff. I really love the online dating space. I love some things that are happening. My call previously was with a B2C founder, but B2B is just, I don't know. It's not just easier. It's more fun. If you have 100K LTV and you are getting such positive signals, you can go crazy on the marketing, because let's just go back to the crazy idea of throwing a whiskey night in Manhattan, and how many hedge fund managers could probably get 100 from 10 or 15 different companies to come to like a $10,000 event, which it wouldn't even cost 10 grand. But let's just say it costs 10 grand. I guarantee you'd get at least 2 to 3 clients out of that. That is an ROI that not many people can get. If we throw a party in LA, New York, we'll make 300K off of it. So that's what makes B2B marketing so fun to me. And I shout out to Colin, my friend that got me into B2B. I posted a thing on Reddit 10 years ago that I hated B2B marketing. And then we started hanging out, and he was only a B2B consultant and I was all B2C. And then we started sending clients to each other. And then now he's living in the south of Italy and retired, and I'm still doing it. But my point is, that's why B2B marketing is so fun and easy. So that means that if we have 100K at the top, we can reverse engineer a potential CAC or customer acquisition cost to every layer of the marketing funnel. And that should inform our marketing team how aggressive we can be. For instance, so there's obviously at the top of the funnel is all the meetings we have. Then there's, I don't know, they either demos or free trials or proposal. Then there's closed clients. There's just the most basic funnel. So if we're 10% of meetings or 10% of leads lead to a meeting, then every meeting is worth 10K. Then if 10% of those go to proposal, then every proposal's, you get my idea. Yeah. So we can reverse engineer that and spend a lot of money on marketing.
I think you hit a very interesting perspective, and I do wanted to maybe put you on the spot, and we have a key question on the problem we need to solve. I think this related to what you mentioned previously, right? Like, hey, how do you make sure your product is secure for your hedge fund client, right? Yeah. And I mentioned to you that our solution, basically, we're an extended partner with our clients. So we go build everything in their, kind of a safe parameter. We do a dedicated deployment. So it's cool. I love it. People who get it, love it. But as I mentioned, this is kind of like a barrier. Because of that, we don't offer free trials, right? Because again, it takes our efforts, go partner with our clients, deploy our
paid
system.
Trials, okay.
Right. So we do paid trial, and that has been, as you mentioned, hey, there's, it's the general sentiment of the market is like, oh, hey, here's another AI tool. Okay, if I love it, what's your free trial? And we actually lost, some of the conversation got lost there, and like, oh, hey, why you don't offer a free trial? And I have to go explain to all that kind of a mechanism, reason why to them. And then, how do you think will be the best way to solve that? Hey, that gap, right? We're obviously deliver value, but hey, there's no free trial.
So for lack of a better term, fuck them. No, I'm kidding. No, seriously. Like I'm the same way with marketing. I've been doing this far too long to need to do an hour-long call for prospects and then like sign an NDA before I get to look at I say no, there's enough companies. I had a founder that just raised millions. She's rescheduled. And I really want to prioritize working with female founders and founders of color as well. And she's rescheduled like 3-4 times. And I just had to email back, hey, I'm not interested in working with you or doing a call. Like if you're not really focused on working with me, then I don't want to work with you because I want this to be successful. I want wins more than I want just some revenue from my end. So if they're looking for a free trial, they're not going to be the right customer for you. Like at the end of the day, so putting it in the most easy to remember terms, I think basically when someone asks for, don't you have a free trial? No, our average clients save X, Y, Z, whether time or money. And you have that very bold, that's what I mean by saying fuck you. You don't actually say fuck you. You say like, no, we don't do free trials because our clients save like X number of millions of hours per year. Yeah. So if you're not willing to risk a little bit of money to potentially saving 100 million on in costs of man hours and efficiency this year, then good luck with your hedge fund, because the whole idea of the business is squeezing out a little more juice out of this and that and being lean and more efficient. So we're bringing like a potential factor of 5 or 10 to your business. So I think you can invest in this little test, but that's why I said like, maybe taking the name AI out of it and doing an AI test where it's just Menos. And Menos is an AI-powered and AI-enabled company, but we're not just a little AI startup from Silicon Valley. We're actually the smartest hedge fund optimization tech company in the world. And we're built from the industry inside with a lot of AI that makes us like a team of 1,000 for your company. And you didn't even mention service until 30, 40 minutes into the call, which I'm also finding is really successful for clients that I'm working with. Is we are an AI powered service. We're not just an AI platform anymore, because the word platform means they need to learn how to use it. These companies want, enterprise clients want a lot of like hand holding and white glove service. So they pay more for a service, and a service does not have a free trial usually. So that's what separates it. So AI is considered platform, but AI powered or AI enabled or AI driven service. There's so many terms. I saw one the other day, AI synchronized the other day is a new term, but it was a streaming tool. But so, so I think confidence and just, hey, if confidence in the reply around, I understand that you're used to getting free trials, but this is a really complex service that we offer. That's why it has to be a paid trial. But, if you're interested in, like sometimes so for me, if somebody asks for an hour of my time unpaid, besides you and people on this podcast that I handpick, I send them a link. It's $500 to book that hour, but then it's $500 off any larger coaching engagements that we do together. So it's essentially free, but I want to know you're serious. I have enough inbound requests from people that read my book or whatever. So that's how my language gets. I just want to know you're serious before, because I have to learn about your company. I have to care about your company. We have to do a lot. And then they either go away if they were never going to spend the money, or they're like, yeah, I'll definitely spend this 500, Andrew. I Googled you. I saw that there's a lot of reviews of people saying the calls are amazing, et cetera. And so, the confidence needs to be there on you as the CEO. And then if you have salespeople, it comes from you down to them. And then you need to have those numbers. Like, it's a paid trial, but I can take it off the first year if you pay for a year up front. Like if you, whatever. Usually hedge funds, I don't think they care about saving the money if you're clear enough about expressing how much value they might get out of that trial.
Right. Well, this is gold, right? Yeah. It goes back to your previous point. Be direct, right?
Be direct, and know that, like you said, there's 25% that are going to be early adopters. And 50% of those people, it's not going to be the right time for them because they're already crushing it, or they're so not crushing it that they can't invest any money and they have to get there. So timing is 40% of what closes deals. Yeah. But then also the ethos and the mentality inside of the company. Are we generating a culture of innovation, or are we like really stale and family owned and not innovating? So at the end of the day, it's just about spray and pray. I mean, like, it doesn't sound smart, but we're reaching out on LinkedIn and on email to every single person, like at least 3 people in every organization. That's building your audience. Only 10 to 15% of those people are going to respond in any way. And only 50% of those, maybe 30% will be positive. Most people are like, not an interest right now. Cool. Then we capture them in your LinkedIn audience. We capture them in an email list that we can add them to your newsletter. We can tell them about new features, new products, new case studies. Even if they didn't accept it, I know it sounds like it's not GDPR compliant, but it doesn't matter in the US. If it's that targeted, they're not going to click spam on it. It's hedge fund AI news. How could they ever unsubscribe from that if they're at a hedge fund and you're sharing news about other AI things that are happening, other hedge fund news things that are happening? They'll never unsubscribe. So that's the highest percentage that will respond. And then everybody else, you have to do like events and webinars and like in-person things, and like you're going and meeting with people and continuing some of that founder-led stuff. There's also the content and PR piece, getting you to speak at conferences, getting you on other podcasts. This is not a really targeted one. Hopefully we can get you a client out of this, but it's unlikely. But there's hedge fund podcasts, and who else is innovating in the space? You need to go around and do that circuit. And that's also going to bring people inbound. Like when they read a whole article or they listen to a whole interview, they usually get sold on themselves, and that sales cycle tends to be quite short. So the shortest answer to that, like I said, is forget about them, because if they come back and they're not willing, cool, we'll follow up with you guys later. We'll see how you're doing versus our clients who are investing on this trial. Because can I just send you a case study, Andrew? Like, you'll be able to see what happens for most companies after they do this trial. And then, like, I call it the mic drop moment. Like, we're not begging you to do a free trial. I literally don't even care if you work with us because we have so much demand. But I like what you guys are working on. My team identified you as an early adopter in the space. So I wanted to reach out thinking that you guys would want to become 10 times more efficient and save 80% on your investment strategy, decision-making, due diligence, whatever it is, the industry terms. How can they say no to that? Okay, yeah. We'll let's talk about the trial,
Yeah. You're absolutely right. I think, to the benefit of listener of this, podcast, I think what you mentioned is really amazing because I actually heard one really interesting comments again, with one of, the, kind of people, well-respected people in the VC world telling me this. Some founders actually are obsessed with, hey, I got the win rate, right? So, hey, I reach out to 10 people. Out of that, 8 people were actually, are interested. They care about that win rate. Actually, that's a very bad sign to do. It either means you are not reaching out to too many people, to enough large audience, or meaning that you're not doing that quick selection of early adopter. So the saying is you actually have to, almost target for low winning rate. Let's say 10%.
Interesting.
So see,
Yeah.
that's actually to your point.
That's what I said,
Talking
yeah.
to more people so that you find that really, correct early adopter that can go
Yes.
shape the product with you. So that's really important.
Yeah, well, think about it like this. Other people are going to start building solutions for this industry, right? So even if you have the most incredible tech, you have a limited amount of time where you can be first mover. And there are also companies that are thinking we can build some shit internally on our own. So you're battling against people at Bridgewater thinking that they're smarter than everyone else in the world and that they can build this stuff on their own with their own quants and their own algorithms. And competition in the market. People are going to conferences, seeing other AI companies, hiring agencies to like try and build their own stuff. So you need to move quick on the marketing because you need to gain market share. You need to get people to realize that it's way more efficient for them to hire a proven company than try and build it, waste 18 months and hundreds of thousands of dollars building it on their own or meeting with multiple companies as they're popping up. And so that's why marketing is of the essence and important for you to unleash. That's why it's called funded now what. If you're in a space like this, you can grow slowly but surely, but like you don't know what's going to happen with AI. You don't know what ChatGPT is going to release. You don't know how long you can exist in the market. So we want to get as many customers as possible and so top of the funnel is the only number that I really look at, and the very bottom. I guess bottom is closed. So middle, I want to see how many meetings am I getting for my founder. And then if shit's not closing, I'm coming to those meetings and watching what my founder does. And now there's also AI tools that will listen to the founders' meetings. I'm starting to work with some tools like that. And then I've got, a litany of fractional sales consultants that I work with that I bring into my clients as well, and fractional recruiting people as well. Because usually when marketing goes right, then sales is the bottleneck or recruiting is the bottleneck. So we're alleviating those issues as a team with crucial recruiting and where we do fractional placement of non-marketing related things. But Junchen, this has already been the longest podcast I think I've ever done by a minute. But on top of that, I forgot to give you a shout out for rescheduling with me so many times on both sides. One time it was your wife. One time it was me at Oktoberfest in Germany, not feeling so well. And just want to appreciate you. And thank you for your time and for the insight into the industry, because it's really not something that a lot of people talk about to lay people. Like, this is what hedge funds are about. I thought your insight was really interesting about humanizing it a lot more, as the only things we ever see is billionaires buying $200 million houses.
Penthouse,
But But so I really liked what you said about it being innovative, and thank you so much for being here today.
Thank you so much, Andrew. I learned a lot. Make sure you share the recording to me. It's Bible. I'm going to restudy it. Every word you said. This is amazing. Thank you so much.
I will get you the recording, and then obviously we'll promote this and launch it next week.
That has been another episode of the Funded Now What podcast with your host, Andrew Lee Miller, brought to you by Growth Experts. If you liked this episode, please subscribe. And if you really liked it, please share with other founders and entrepreneurs. Thanks. And we'll see you in the next episode.